We are coming to you from the Mysore campus of Infosys Technologies, which is astoundingly beautiful. You can see the set behind me. It kind of gives you an idea of what the campus is all about. Great buildings, great, a really sort of phenomenal campus. But that's not what we're here to talk about. We're going to talk about the results at Infosys Technologies for the third quarter, but also the management churn, which we've seen over the last many months or so. As always, the top management team is joining me here. SD Shibulal is CEO and Managing Director at Infosys. He's joining in. Shibu, thanks very much for your time. Good morning. Great to have you.
Good morning.
Rajiv Bansal is CFO at the company. Rajiv, thanks very much.
Thank you.
Appreciate it. BG Srinivas is President and a member of board of the company. BG, congratulations first. Thanks very much for your time.
Thank you.
Great to have you with us here. So we'll get to the numbers in a bit, guys. But I think the thing which people want to know is what is really going on at Infosys with all the top management changes. It is unusual. Shibu, let's just sort of start with that.
Actually, let me start with what is going on in Q3 first.
No.
I think it's important because we are here to discuss Q3, so we should discuss Q3 first.
No, I promise we will get to Q3, but I just want to get a sense.
I also promise I'll get to the other part.
Sure. Go on.
Q3 was a fairly decent quarter. We grew by 1.7% in Q3. But more importantly, our margins have improved. Our margins went up from 23.5% to 25% operating margin, and the net margin went up from 18.5 to 22.1%. Volume went up 0.7%, but more importantly, it is more offshore and less on-site. The on-site volume went down by 3.4%.
Is that the big highlight?
I think it's very much in line with our cost optimization initiatives, because for the last 2 quarters we have been on a journey of doing cost optimization. So one of the part of cost optimization is to see how we can add more value from offshore. And that is a very important indicator. It's a very important leading indicator that our cost optimization journey is starting to yield
people
results.
Back home.
Not get people back home, actually add more value to our clients from offshore. That's what we have done.
But is that the big sort of takeaway from the result? I mean, the shift to offshore, if it had been as much on-site as the last quarter, I mean, we would have seen a bigger 3.5% growth.
No, I think the takeaway from Q3 is that it was very much in line with what we expected. It is Q3 and Q4 are soft quarters for us. Q3 is soft because of holidays and furloughs, and we had expected, we had a soft expectation for Q3 and Q4. It's a decent quarter, very much in line with what we expected.
What's your sense? I mean, margins have gone up. That's the other highlight to my mind.
Absolutely. I think we have done exceedingly well on our initiative to bring more efficiency into our operations. But at the same time, we are making investments, and we continue to make investments to secure a better future for ourselves.
So marketing expenses have gone down in the quarter, right?
So if you look at it, what has
almost
happened,
200 crores or so.
So if you look at what has happened during the quarter, as Shibu was saying, our delivery operations have become more effective. We have been able to move work offshore. As a result, it is showing up on the profit and loss account in terms of salary cost reduction. Even looking at sales and marketing as a part of the cost initiative that we've been talking about for the last 2 quarters, we are looking at every individual sales guys, what they're doing, whether we can do it much more efficiently and much more effectively. As a result, during the quarter, there's been a reduction in the person months of sales. Though we have good headcount, we are adding more salespeople, but also the mix of people in sales is changing. And that is showing results. But it also gives us the confidence to invest back in the business. And I think if you look at during the quarter, we have invested back in the business. But I think after having kept the margins at about 23.5%, I think it's a good sign. It's an early but promising sign of seeing margin improvement happening. I think, but what I would also add is that, if there's a need to make investments, we would make investment. To that extent, you will continue to see quarterly fluctuations in our margin. But I think in the medium to long term, I am confident about 25% operating margin for the organization.
No, because when you talk about investing in the future, what is happening at Infosys seems to be a realignment of adjustment of expectations of future growth. I mean, that seems to be...
So there are multiple factors for the margin increase. See, one is that our pricing went up by 2.2% both onsite and offshore, which flows into the margin. Our onsite mix came down, which flows into the margin. So if you look at, there are many factors. But what we have also done, if you look at, we have invested in quality and productivity during the quarter. Our software expenses have gone up during the quarter. So we have plowed back a lot of these savings back into the investments required for better delivery efficiency, quality and productivity
Although
tools.
employee hiring, I think, is down, right?
The net hiring is down,
Yeah.
but I think that is because most of the fresher joinings have already happened during the first 2 quarters, and most of the freshers joined the first 2 quarters. But I think as we are preparing our operations plan for the next year, we are looking at hiring people from the campuses as we speak.
So when do you get back to 30% margins?
I think-
Margins 3 years back.
I wish I could say tomorrow, but I think we also have to understand that we are going through a transformation. I think the market is not what it used to be many years back. We have to invest back in the business. We have to change our operations, our the whole model that we have. And I think I would say that in the medium to long term, I would be more confident and more comfortable with the operating margin of about 25 plus minus 1%. But I think taking margins 30% would start impacting your growth and your model unless we are able to change the model completely over a long period of time.
Biji, more responsibilities? I mean, between you and Mr. Rao, responsibilities have almost been evenly divided.
No, it's a privilege to do more at Infosys. Even FS sector, which I was handling globally, was a significant chunk of responsibility. It also gives me ability to contribute more in other sectors. Again, if you remember, I was handling manufacturing sector 3 years ago, so I do continue to relate to the clients in the sector. So there is a lot more to be done, both in Americas as well as in Europe. The market is definitely stabilized. We see an uptick in market both in the US and Europe is also on a recovery path. So hopefully next year we will definitely have more to do in all the 3 significant areas. Clients are looking at cost optimization initiatives. They are simplifying their internal operations. There's more we can contribute to in that area, definitely. The other areas which we see clear opportunities, clients are definitely looking at newer operating models, newer channels for growth. Innovation is key on their agenda. Here again, we are seeing Infosys, both capability and our assets in terms of our IP, our platforms coming to play. So these are 2 distinct areas. Again, manufacturing, we are also seeing clients looking at leaner R&D, leaner engineering services. So there again are opportunities for Infosys. So I'm happy to assume this responsibility and contribute more.
Shibu, what is growth for 2015 looking like?
Actually, right now it's too early to give a guidance for 2015.
No,
but
2014. I mean, the rest, as we start the calendar year, not 2014. 15
so
to 15.
when we look at budgets are somewhat stable. That's what we are seeing. At the same time, clients are very much focused on cost optimization. And that cost optimization does give us an opportunity to create solutions which can reduce their total cost of ownership. And that allows us to grow with our clients.
Are you seeing demand for IT services increasing in 2014 compared to 2013?
There is a slight uptick which we are seeing all across our client base. At the same time, we will wait for the budgets to close and their new initiatives to be announced for us to have a better idea about next year.
But as things stand right now, you're seeing that maybe things are going to be better.
We are seeing our
Slightly
clients,
better.
We are seeing our clients marginally more confident than in the past.
Volume growth of 0.7% that was a little disappointing.
So our volume grew by 2.6% offshore, and on-site volume came down by 3.4%. So it also reflects the softness of the quarter because of furloughs and holidays.
Okay. So where do you expect, volume growth as we proceed into the next couple of quarters?
I think our guidance states it all, right? Our guidance is 11.5 to 12%, constant currency 12.4 to 12.9%. In many ways, that summarizes everything, right? It shows the run rate which we have achieved for the last 3 quarters, plus what we are expecting for the next quarter.
What is your sense on margins? As in the near term, I'm not talking about when you get back to 30%, but what's your sense? Because at some point you'll have to, and I think we saw it over the last 2 quarters, not that much focus on margins. Let's get revenue growth back on stream. What's going to be the trade-off?
No, the trade-off is very simple. We have to secure our future by getting better growth. We want industry-leading growth. We want superior margins. So I think the aspiration is very clear. But I think the first focus is on getting the growth. And if you look at that's what I was saying. If you look at the last 3 quarters, we have invested money back into the business. Right? And this time we are seeing the early but promising results of that investment paying off. We are seeing efficiency in our operations, which is flowing back to the margins. But at the same time, we have invested back into the business. If you look at software expenses have gone up by almost $16-17 million in the quarter,
Right.
which is a big investment into quality productivity, which will be able, where we believe that we can get better delivery efficiency as we go forward. So I think I would say that in the near term, you would see margin fluctuations from us because we would continue to make flow back investments into the operations as and when needed. But in the medium to long term, I am confident about 25% operating margins, plus minus 1%.
You're not telling me very much, Rajiv.
No, but there's nothing much to say because I cannot say much about the next quarter because if there's a requirement, if BG or Praveen comes back to me and say we need to invest this business and it'll give us returns the next year, I would be more than happy to make that investment. So it's very difficult for me to say exactly where the margins are going to be next quarter because a lot would depend on where we see, what opportunities we see, where we need to make investments. But I think what is more important is where I see the medium to long term. Even after we make the investments, if I can get 25 to 26% operating margin, I think it's good.
That's good.